This is the Friday, July 25th, 2014 version of the Market Plus segment. Joining us now is Dan Hueber. Dan, welcome back.
Thank you very much. Glad to hear.
Well, and we're glad to have you on the show. We didn't have a chance to discuss cotton. Declined again this week. Crop looks tremendous. What's your advice to producers out there watching this great crop growing?
You know, and again, like the rest of the row crops, it really doesn't have very much good news to look at. We know we have an impending harvest coming here very, very soon. Interestingly enough, prior to about Wednesday of this week, it really acted like it was trying to find a little bit of a base. Collapsed again, went into new lows. So I honestly do think by the 1st of August here, though, we probably will find a little value in the cotton market. Still some uncertainty of when we're going to get harvest moving. So it's, you know, not that that's going to call for any kind of a massive turnaround. So if somebody does need to market, haven't done any forward contracting, then yes, I would probably be a little bit patient, see if we can't get a bounce in August. But as with any of these, the production crops right now, I guess I would not expect major moves. I mean, if we can get 2 to 3 week rallies, it's probably well worth rewarding and converting some of those products to cash.
On the cotton side, couple up to $5 maybe might be the extent.
At maximum, right?
Okay.
You know, and I think, you know, in any given circumstance, a 10% rally in any market's normally good. When you're in front of harvest, you know, you probably want to say closer to 5 to 6%. So
okay.
if we bounce up there, so but certainly, you know, 5 to 6 cents would be a marvelous move. So yeah.
Yes, indeed. Well, now we've also got a question. And I think this we've talked about the big row crop scenario across the board. Tim Defoe in Crookston, Minnesota has a question that I think encompasses everything.
Sure.
And he's asking, if the cure for low prices is low prices, when will the patient get better?
You know, we'll probably try to kill the patient a number of times yet, I suspect. So it's, you know, and absolutely it is a truism, but you also have to look at the time of the year we're at. You know, a great example would be, let's move back to December, January last year. We were faced with a somewhat similar situation. You know, we were pushing prices down until we found demand, which we did, you know, right at the end of the year, the first of next year. But we had a lot of known bearishness already built into prices at that point. Right now, we're still trying to factor in all of those negative elements, just how big this crop will be. I mean, just how big of a hit are we going to see with some of the exports to the, particularly to China. You know, how much competition are we going to find with the excess feed wheat now in Europe? So those unknowns still are probably going to keep this patient sick for a while longer. Historically, on big crops, at best, we tend to find lows at the earliest in September. More often, we won't find that low until December. So, and not that we have to go down that entire time, not that we wouldn't start to begin to base out, but boy, to start making the patient feel a little bit better, you know, it could be an extended period here yet. So.
As we look longer term, thinking structurally into the next year, next 2 years, we've seen a lot of marginal acres come into corn production in particular, and now we've got tremendous value on the livestock side. Is there potential that we could lose some of this corn and soybean acres back to pasture? Does the market work that way?
Well, boy, you know, and again, with livestock staying as profitable as it is, you know, into the northern plain states, absolutely. You know, which is actually, if you look at where the cattle numbers have migrated into this country, it is into states that do have pasture ground, North Dakota being one of them. So certainly in states of that nature, particularly who have had a couple challenging years, particularly in the planting progress, yes, I can see how you could see some growth in pasture ground in some of those, you know, even into Montana, Wyoming. California is still going to be a challenge just because of the dryness. Not that they wouldn't love to have their pastures rebound, but you know, I think just economically, absolutely, we have to see the corn acreage drop down several million acres again next spring. You know, we'll get a fresh look at, you know, where the whole picture stands at that point. But it's you know, even looking out the 2015 corn right now, you're still at that $4 level. I think $4.10, $4.11 last night when I looked at it yesterday. So it's a Is $4 corn going to keep a more marginal ground in production? In many areas it could. If a person wants to be an aggressive marketer, you know, you're not significantly under where the crop insurance prices were last spring.
Certainly, so. And especially if the investment's been made
Correct.
in upgraded machinery and so forth.
Correct.
Now, as long as we're on the topic of corn, you know, what we've talked about the DDGs in China. We've got the EPA eventually going to rule, I've heard relatively shortly, on the ethanol mandate.
Correct.
Can we talk a little bit about what the future of ethanol looks like? We've heard reports of growing exports. It's been tremendously profitable. What does your analysis take you in this market?
And I think the export side of the ethanol business is the one bright spot for that industry. And I shouldn't say one. I mean, we have pushed the ethanol engine up to where we're using 5 billion bushels a year. In fact, I wouldn't be surprised that on this next USDA report, they probably bump up this year's usage to another 25 million in corn. I mean, the numbers have just consistently, week after week, been excellent. We're not building stocks. And it is because of that export side of the market. And I think that is the bright spot looking forward in ethanol. As a speaker I heard last week pointed out, 10 years ago we worried very much about the competition from Brazil because they could take very inexpensive Brazilian sugarcane, convert that into ethanol. Well, Brazilian sugarcane is not inexpensive anymore. It's up to world prices. So U.S. corn ethanol competes very effectively with sugarcane-based ethanol out of South America. So that has put us in a strong picture for the market, but I think it's more of a balancing. If we lose the mandate, this ethanol, the export picture kind of counterbalances on that. So instead of seeing growth of 500,000 or 1 billion bushels over 2 or 3 years, it might be another 50 or 100 million. So it's the velocity of which we continue to consume more corn is going to slow down significantly in the ethanol sector, but it's still going to be a major force. I mean,
certainly. I mean, it is going to provide some strength to the corn market as we continue to go forward.
If and granted, we could produce a 14 million bushel crop this year, but still 5 billion bushels is going to go to ethanol. So it is
rather have it going there than nowhere.
Absolutely.
As far as the corn producer is concerned.
Correct.
And as long as we're talking ethanol, we saw crude oil take a pretty big spike on the news of the Malaysian airline accident or attack, being shot down, and now it's maybe turning the corner. We might be kind of coming back to a little bit more comfort in that part of the region.
Right, and again, I mean, there's always going to be uncertainty in the Middle East, and certainly with the Ukraine situation, and of course Russia being a major provider of energy to the rest of Europe. Anytime you unsettle markets are going to get a knee-jerk reaction, but unless that problem persists, they're just going to be that. They're going to be more knee-jerk reactions. I think if you look at the world production of crude, you look at the domestic production of crude and natural gas right now, it's pretty difficult to be a bull. So if you don't have that black swan event that scares everybody into doing something, I think the market on its own is probably going to tend to drift back lower. So now, will we break significantly back under the $100 a barrel mark? You could probably say we're into more of a 90 to 105 range, but it's at least not punishing you every time you turn around with higher prices as well.
Certainly. Well, Dan, it's been tremendous to have you here. There's a lot of insight in these markets.
Certainly, my pleasure to be here again. Thank you.
That wraps up this edition of the Market Plus segment. I want to thank you for taking the time to send in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.